All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all, especially those of you that are new. If those of you are new that are typically not here daily, so I'll let you know I do broadcast every day from I start at 7 a.m. Eastern, and then I finish at 9 a.m. Eastern. It's free. We have Paul Franco that's on for an hour before myself, SPZ Trader, as he's known on Twitter. Kip Cohen joins us afterwards, take you through the equity markets open. We have Steve Bealby on for the midday market update. I'm back for lunch for an hour and a half, and then Steve Bealby does the closing bell. We broadcast throughout the course of the day, free of charge. We've been doing it for years. Hope you guys enjoy it. Hope you guys join us more often and make it a part of your normal trading day. We've been broadcasting for 13 years now. So yeah, anyway, but at this time of the day, every day, or every trading day anyway, we go through the majors. So, I have a pretty set schedule of what we cover, but today, for example, it's going to be a little different because we do have a special guest that we don't bring on guests that often, but when we do, people like Mark Chandler, it's really quite special to have him here. So we'll be not answering questions like I normally do, but we have to get through the morning analysis, and I want to make sure that everybody gets their chart set up. And we do this, like I said, it's the same analysis every day. I leave the lines there from the previous day so you can see what we've drawn. And in this case, you can see exactly what had happened yesterday. So the euro, we extended, as we talked about yesterday. There was a chance that we could break 110, hit the 127% extension, and then pull back. Excuse me. Barry asked, will Mark take questions? Yes, Barry, if you came in a little bit late, ask your question as soon as he gets here, and I'm going to try to get through as many. I'll see if he can, answer some questions towards the end of his session. He'll be with us for an hour. Where else are you going to get an hour with Mark Chandler? I mean, seriously. So hope you guys really enjoy that. Okay, so yesterday morning, we were looking at the euro dollar. It was rallying like this, and we said, hey, it looks like we're going to test those highs. I'll take us back to yesterday morning on the morning edge. We're here. We're like, hey, it looks like we're going to bust through and maybe even take out 110 today. If we get through 110, we got 110.40, which is the 127% extension, or 110.30. And we ended up taking out that 127% extension and pulling back. All right, so what that suggests to me is, and I established a short in the euro dollar yesterday. I already closed out this morning. I closed out at 109.40. Okay, and I was short. My average was somewhere around 109.80, 109.90, something like that. I kept it overnight though, because I started, like Paul, I started shorting as we were coming up here through the 109.80s into the just as we were topping here, and then through the 110s. What you'll notice though is a couple key developments with the euro. All right, so we drew this trend line yesterday. Well, you can probably do something like that and realize that support, the overnight low, is extremely important for bulls. All right. Euro bulls, they need to keep that 109.30 intact, no doubt about it. All right, so I'm going to put that down as support, 1.0930. Resistance, 110.30. And we are still in a range trading environment. Now remember, we've been in a bearish environment for a long time. All right, for those of you that don't know that, we've been in a very bearish environment for a long time. Obviously, due to the ECB decision, we actually held this low. I am looking to establish a short as we approach this trend line resistance if we can get there. So if we can get to this blue line right here in the next week or two, up towards the 111, that's where I personally want to start establishing some euro shorts. All right. We also have this previous support that's kind of come into play. That comes into play at like 110.60. So, as we get in this zone, this is where I personally want to start establishing some euro shorts. I think that's going to offer the best, in my opinion, the best risk reward. Okay, man, that euro pound is really taking off, guys. If you're not watching it, it's ripping. Wow. Anyway, but that's not neither here nor there today. All right, we're in now in a very big trading environment, or a range trading environment, where we've been in a very bearish environment for quite some time. We could turn bearish again, especially if we break below 105, or we start turning lower through here. I'll put it back to being bearish. But for right now, range trading. Okay, let's talk about the cable, because the cable is just hitting new lows. Okay, so here's the pound. Pounds under pressure. Following the ECB decision, or the Bank of England decision. I think one of the reasons why the pound is selling off, because Fred asked, why is the pound selling off? She didn't get another dissenter. You had McCafferty, who's been dissenting against the rest of the council for last several months, and no one's joined his ranks, which suggests that the rest of the MPC is really, happy to keep rates low at this point. And I think that lack of dissenters is just, triggering a nice little sell-off in the cable. Very similar to the euro dollar, we hit 127% extension yesterday, which really stinks, because I would be positive I was still short the cable, but I closed it out ahead of the Bank of England decision. I made money in the euro, lost the same amount in the pound overnight, which frustrating because it's a damn cable. Pisses me off. But needless to say, the pound has come under pressure. Like I said, the lack of any other MPC members jumping in, and with McCafferty probably has worried some cable bulls. Anyway, as you can see, we also stalled at the 127% extension. We have this this descending wedge that's been building here, on the daily chart, which means we should be capped at 152. Any rally to 152, even if we get a bounce back today, well, I think now if we get a bounce back today anywhere towards highs, you're probably going to find some sellers there. But as far as the upside goes from here on out, at least for the next couple of days, 152 should cap prices in the cable. All right, and if you're looking at, let's grab this. It'll look something like that. Okay, now what that means is we're also stuck mid-range in this. As we're building the apex of this wedge. For today, because this matters more longer term. I doubt we're going to see 150 today. I doubt we're going to see 152 and change. All right, so realistically, we're at a 38% retracement. We should find some support down here, maybe 150.50 if things continue to deteriorate here at the 618. And obviously, now anybody who has not sold the pound is going to want out on any move back to 151.60. All right. So resistance 151.60. Support 150.50. We are in a range. A lot of our stuff is in a range right now, so we're in a range. All right, let's go over to the Swissy. Like I said, I'm trying to move as quickly as possible, just because with our guests that are coming in, I want to make sure that everything gets done. So here's the Swissy. We hit a new trend low following the ECB decision last week. I have established, and I am establishing, a dollar Swiss long currently. All right, I'm building my position back. Support will be at 98 cents. This is going to be massive support down here. That is a daily 618 retracement. What may have happened, and this is something that you have to also think about, we might have hit this low, broken through that support. All right, maybe give us a false breakdown and push back up. All right, that doesn't mean we turn bullish. It actually turns bullish here, but what that also means is we actually could open the door to start squeezing here. So my opinion at this point is, well, first of all, support's going to be at 98 cents, but probably the lows that we tested here, 98.20. So I'll write that down, 98.20, 9820. Okay, resistance, it's going to be a tough call here. But we made a new low, relative strength did not, so we got divergent relative strength. All right, it's to note, especially if you're on the short side. I mean, if the this previous support comes in at 99.15 right through here, that's a spike high or close to. It's 99.10. 99.15. If that gives way, if those highs give way right through here, you know, you're probably going to see a further squeeze in the Swissy. All right. Point 99.15. And we are in a range environment here as well. Okay. Let's go, and if you guys don't know longer term why I'm establishing a position here is because we're retesting a lot of these broken trend lines through here. You know, these multi-decade trend lines through here, multi-year trend lines through here. As we retest those, I want to be on the long side. That's a retest of a broken trend line. So I'm, you know, for me, that's the type of trading I like to do. I like to trade the breakouts, you know, as they break trend lines, and then as they retest them, I like to get long. So in this case, I like to get long, and that's what I'm doing here. But I am not blind to the fact that we can actually you know, drop a little further too. It is possible. All right, let's get over to the yen. So here's the dollar yen. Now the dollar yen made a significant breakdown yesterday. I think total I made probably about I don't know, 160, 170 pips in the dollar yen yesterday because I was short the dollar yen at 123.20. I closed it out as we were getting towards support. Then we broke through. Then I reestablished my position, and then I closed it out yesterday down here. So I end up doing really well with the dollar yen. I am not short the dollar yen right now. I still have yen long exposure, okay? But as long as equities continue to stay relatively weak, I think the yen looks like it's in breakdown territory, or at least trying to be in breakdown territory. Now, what we're seeing here, and what's very significant from here on out, is as long as we are below 122.20. Now remember that support held us all through November and December. Okay. Okay. That support was massive. Any rally back to 122.20 would be a godsend. It would be a gift from the currency gods. Oh, dollar yen rallied to 122.20 and set up for a good short. I can even do it, and I'm not even feeling good. Those are the Greek Orthodox gods speaking, just in case you'd never heard them before. But yeah, if we got up there, that's what I would be hearing. I'd be like, ooh, I need to get short. You know, question is, are we going to make our way up there? It's going to be real difficult if equities continue to slide. Okay, you can see the yen, it's just really strong at the moment. For today, intraday, you can see it right through here. See that spike low? That's holding us. Support, that's important. If that goes, there's going to be a lot of stops below there, because you get the bottom pickers. You know, they're sticking their fingers in their butts trying to buy the bottoms here. They're going to end up with some pretty smelly fingers if we drop below those lows. So that's at 121. 121.05. High at 121.85. Okay. So I'm going to basically put 121 yen. I put an asterisk if I think it's really important. Like I believe that 121 support is really important, because I do believe there's going to be a lot of stops below that level. We are still in a range environment. We're in a large range environment, even though we're trying to break out of this range. But look, longer term, I mean, all of this year, some of last. I mean, it's a big range, right? Yes, it looks like a head and shoulder pattern. Yes, I can go with that, but we're nowhere near the neckline right now. The neckline's way down here, so nothing even to think about at the moment. It's just it's very choppy. Okay, so just because we're breaking through some near-term support doesn't mean the longer-term structure of the charts have changed. Let's go over to the Canadian. Now, the Canadian's a bullish currency. It's extremely bullish. It is coming off right now because we just hit 127% extension on Monday or on Tuesday. Those of us that were here on the morning edge, we shorted it up here. Some of you made more money than I did on the way down. We've been holding the support very well. Paul Franco talked me out of not buying the dollar Canadian yesterday, right there, which I would have ended up making 100 pips. Thanks, Paul Franco. I meant to blame you yesterday. I wanted to harass him today. I'm just now remembering it. But because you guys know we wrote down support as being 135.25. But I do agree with Paul's analysis from yesterday, actually. I'd rather be a buyer down here at 134.50. That is the major breakout point, as you can imagine. So, I'm really looking for a move like, okay, to buy it down here. That's what I'm looking for. Now, that support is going to be important. Again, that comes in at 135.25, right? That's what we had written down yesterday. It's, even though we overshot it a little bit, it's still support. So 1.3525. Now, the problem here is if crude dumps, we're gonna jam right back up towards the resistance again. We're just gonna jam right up here, just like we did yesterday. Everybody thought, oh, the dollar Canadian is gonna come down because crude oil had spiked up to, what was it, like 58, 59 after it was like 59, or I'm sorry, 59, 39, excuse me. It was like 39 after the crude oil inventories came out. Everybody's like, oh, yeah, here goes crude. It's going to rip. So, a lot of people got short the Canadian right there. And they got that trade shoved so far up their rear end. Yesterday it was not even funny. Okay. And, it's a problem. You got a little false breakout in crude. It comes back down to 37 and change. It shoves that dollar Canadian right back up to highs. So if crude, which is not too far from new trend lows, if crude starts to break down again, you can have the dollar Canadian right back up at 136.20 easily, okay? Just like it did yesterday. Don't write it off. It's dangerous. A lot of people have been doing that. A lot of people have been trying to stand in the way of the Canadian, and I think that's very, very dangerous to do, right? Also keep in mind, longer term, for those of you guys that have been following the Canadian with me for the last year and a half, it's worked out exactly as planned. We've had this flag pattern drawn for I don't even know how long, literally 6 months, okay? And when we hit 134.20, why did we hit 134.20? Because it was like 134.20 was like 161% extension of this move of the flag itself, right? You remember when we stopped there? Stopped on a dime. It was like 134, 133.80, 134, and we stopped on a dime. Reverse came down, retested that previous resistance, the breakout point, perfectly. Within 20 or 30 pips, bounced from there and went to new highs. This is, you may call it the loony, and you may say, well, it's a loony, it's so crazy, but longer term, it's following its technical path like no other currency out there. We have a big flag pattern that points to 142. I wouldn't even consider shorting the dollar Canadian on a swing basis until we get to 142. Longer term, we have a big cup and handle pattern that points to 160. So, if you really want to get bearish the dollar Canadian, maybe you might have to wait for a couple of years till we make it up towards 155, 160. I believe that crude, we'll hear Mark's opinion, but I believe crude could, probably see the 20s, maybe even lower than that. I'm not a crude person, but I do know that technology has been shifting. Crude oil is becoming a fossil fuel, like in a true sense, like it's a fossil. It's not going to be as widely used moving forward. Production's still high. You got OPEC trying to fight for business. They're going to keep production high. Everybody's going to try to, it's getting cheaper for us to frack. Crude's broken. I've said that for years, though. But, crude is broken, and crude prices, unfortunately, are probably not going to recover. It'll probably end up being like the coal industry in the future. And unfortunately, what that does to the Canadian economy is not anything that's entirely positive. It's probably going to continue to weaken their currency. But that's a good thing for Canada, believe me. Canada needs a weaker currency, and it's going to help, doing business here in the United States. Now, I just got off on a total tangent, and I'm so sorry because I realized we got more to do. All right, let's go over the Kiwi. Got to do that really fast. Kiwi dollar, the RBNZ kept rates unchanged. We pivoted right off of that trend line, that yellow trend line, perfectly yesterday. We hit that trend line, overextended it. I went past it, during the RBNZ decision, but we actually held. And what that does is it puts us right back into that inverted head and shoulder pattern target that we had the other day. That comes in at 68 cents, or 67.90, whatever it is. Let me figure out what that is. It is 67.86, 67.81. So 67.90 key resistance, 67.90, and that Australian employment report really just helped, keep the Kiwi from selling off or giving back any of those gains. Support will be whatever these spike lows are from overnight, right through here. Okay, that comes in at 67. Let's just call it roughly 67.15. If bulls don't want to see that give up, and if that gives up, then we're going to have a little bit of a problem. All right, the Aussie dollar, as I was speaking about a little bit earlier, Aussie had blowout numbers. Even the revisions last month that were revised down, it's even though it was revised down, still really strong numbers from last month's read too. All right, so the Aussie, in my opinion, looks like we're building a wedge going into 74 cents, 72 cents being the lower end of that wedge. You go to the daily chart, you can see it a little bit better. It's a pretty wide range. What that suggests to me is any dip now today, any dip you find down here is going to be very well supported. You can see all these spikes around 72.40, 72.50. I think we'll be really well supported down there. Again, I'm trying to move through this quickly. So 72.50 will be support, and then resistance. It's actually going to be the overnight spike high, which will be at 35, I believe, 73.34, 73.35. Okay. I still believe we're in a range. We break above 74 pence, and things are going to get a lot more bullish for the or 74 pence. I'm sorry, 74 cents. Things are going to get a lot more bullish for the Aussie dollar, I believe, which I like. I'm long the Aussie New Zealand, so that's fine by me. All right, now yesterday, what you might have noticed here with the dollar index, we stopped at the 50% retracement, or really close to. All right, that's going to continue to be support for today. That comes in at 97, basically 97.13, 97.15. Okay, that's support for the dollar index, 97.15. Resistance for the dollar index now, and the dollar's been firm, at least against like the euro. We had that drawn from yesterday. It's hard to say where resistance is going to be, frankly, today, because we did hit a new trend low yesterday. See how we hit that new trend low. You see how the dollar may have given us a false breakdown. Relative strength was divergent, so false breakdown, which could lead to a continued rally in the dollar. Maybe pulling the euro back towards 109 or a little lower. Where we're going to find resistance is a little tougher call, I think. It's not as cut and dry as a lot of other asset classes at the moment. This downtrend line, this hourly downtrend line, we'll see some resistance around 98.15. So I'll just go ahead and write that down for now, but it's nothing minor by any stretch of the means. 98.15, and we are in a range again. All right, now I do not have time to go through the peso and the Nordic currencies. You have to also keep in mind that the U.S. dollar, Norwegian krona is extremely strong as crude oil is weak. That that's just something to take into consideration. If you look at longer term for the U.S. dollar, Norwegian krona, it may be choppy up here, but we're in a very bullish trend. With crude oil continuing to stay weak, that's probably going to keep a lid on the Norwegian krona. Mexican peso. I'd like to talk to Mark Chandler about the Mexican peso today. There's a lot of people who've been trying to buy pesos, which obviously has been the wrong side of the trade. As you can see, the dollar Mexican peso continues to strengthen, and U.S. dollar Swedish krona, just choppy inside of its range here. So I'm going to leave the bias chart with you right now. I'm going to go grab Mark Chandler, Chris Baer, bring him in as